What is up, guys? Misha here from beyondthehodl.com, and welcome to another video. I know I haven't been on the channel in a very long time, so bear with me if I'm a little rusty in this video. But in today's video, guys, we're going to be taking a look at on-chain analytics. We're going to be taking a look at what exactly are on-chain analytics. We're going to be taking a look at why we should be using that in our analysis process. As you guys already know, Beyond the Hodl, we definitely use on-chain analytics as part of our anticipatory stage of our analysis. We're also going to be taking a look at where exactly you can find this type of data. And then finally, I'll be showing you guys a couple examples with some of my favorite on-chain metrics that I usually look at on a consistent basis. So with that being said, guys, let's get into it. Okay, so what is on-chain data? Now, a lot of people might not know what exactly on-chain data is. Well, it's basically all the raw data that is natively stored on the blockchain. As you guys already know, the blockchain is a transparent and immutable ledger, which means that we are able to see all the transaction information and all of this good stuff that is pretty much available for anybody to take a look at if you have the technical know-how, right? But fortunately for us, there are other people that have this knowledge and they actually extract this data and they create cool metrics with it. So this data includes number of active addresses, address balances, number of transactions, transaction fees, and a lot more. And like I was saying, this data can then be manipulated to create certain metrics that will give us more insights into a lot of different things, such as the valuation of a specific coin. We can take a look at the behavior of buyers and sellers. We can look at money flowing into exchanges, out of exchanges. We can take a look at stablecoin printing and all kinds of things like that. And also we can look at the overall health of the network. So that is what on-chain data is. Now, what is on-chain analysis? It is pretty much the study of on-chain data. Now, on-chain analysis started back in 2011, and one of the first metrics was called the coin days destroyed, and it was created as a valuation metric for Bitcoin. And like I said, it was the first indicator to make use of Bitcoin addresses, right? Of the age of those Bitcoin addresses. So that is what on-chain data is. That's what on-chain analysis is. Now let's go ahead and take a look at why you should be using that in your analysis process. So why use on-chain in your analysis? Now, number one thing is this type of data is not available in any other market. I don't care what market you're trading, whether it is the stock market, the foreign exchange market, or even the commodities markets. You will not be able to find this type of data. So that alone should tell you that this could give you a huge edge if you start using the data and you start applying it properly in your analysis. So number one, like I said, you're going to get access to information that you're not going to be able to see on your price chart. I know there's a lot of people that swear by their technical analysis and think that is the only thing. No, guys, it is not the only thing. And that's why, like I said, here at Beyond the Hodl, we merge on-chain analysis with our smart money analysis, which for those of you that don't know, it is basically a subset of technical analysis. We decided to call it smart money analysis because our main idea here is we try to follow the smart money. So back to why you should use the on-chain data in your analysis. Like I said, information that you will not be able to find on your price chart. Number two, it gives you a fundamental view to complement your technical analysis, guys. And this is the very important part. It's not about using one specific type of analysis. It's about combining different things to be able to have a bigger picture view, a full picture of what's actually going on in that asset class. So for example, in cryptos, we use the on-chain analysis, which gives us the fundamental view. And then we combine that with our smart money analysis on the charts and using the COT data as well to complement that on-chain analysis. Okay, so number three, it will give you an edge over the other market participants who are not looking at this data. So yes, although this data is available free on the internet, for free on the internet, anyone could have access to it, but not everybody's actually looking at it. So you, by looking at this data and applying it in your analysis, you're giving yourself an edge over those other market participants that are not taking advantage of this freely available data. So that is why you should use on-chain in your analysis. That is some of the reasons why we use it in our own analysis here at Beyond the Hodl. And now we're going to be taking a look at where exactly you can find this type of data. Now, guys, this type of data is available on a couple different websites, and I'm going to give you guys some of the ones that I've looked into, some of the ones that I've used. Some of these are going to be paid. They do have free plans, but most of the time, those free plans don't give you access to much data. You do have to upgrade to some of their paid plans, but some of them are actually free. So first off, Glassnode, that's the main one. That's the one we use most of the time for on-chain analysis. Has a lot of cool metrics in there. And as a matter of fact, all of the metrics that I'm going to be showing you guys after this slide are all from Glassnode. Okay, so that's the number one. That's the one I use the most. Then there's CryptoQuant. I've looked into CryptoQuant. They have a lot of metrics as well. They have a paid plan as well. And their metrics are very similar to the ones on Glassnode. I'm not really sure which one's better than the other. I'm just more used to Glassnode, and I like the way their website works and everything. So I just stick to that one. There's also Into the Block, which is one that I've recently gotten into. Their metrics are a little bit different, so I kind of like having a different perspective, different information, different insights into what's going on the network. And I don't have much of an opinion on this yet because, again, I have just started using it. But what I do know is they have certain metrics that use machine learning, artificial intelligence. So this is definitely something that you guys might want to check out. But then again, this is paid. And then the last two, which are Check on Chain and Look into Bitcoin. These two are completely free. So that means you don't have to pay anything. You can go to these websites, and you're not going to get everything that you're going to find on Glassnode and CryptoQuant, but you're going to get some of it for completely free on Check on Chain and Look into Bitcoin. So if you don't want to spend any money, those are the ones that you should be looking into. So now what we're going to do is we're going to go over some examples. And again, these are all going to be from Glassnode. And if you guys want to check out any other stuff, you can check in the description down below. I'm going to leave links to all of these websites if you guys want to take a look at them. So let's go ahead and take a look at metric number one. So metric number one, which is the net unrealized profit loss, or NUPL for short. So what exactly does this metric calculate, and what kind of insights can we get from using it, right? So first off, it kind of tracks the magnitude of paper gains. Again, paper gains are unrealized profits, and that's pretty much what this tracks, that are held in coin supply as a proportion of the market cap. Okay, so it can be an indicator of investor sentiment, and it can also allow us to know when to buy the blood. As they always say in this market, buy the blood. They say buy low, sell high, buy when everybody's fearful, where, well, this is exactly how you're going to be able to tell when most people are fearful, because you'll be able to see when most people are in drawdown or in the negative. So this is called the capitulation zone, and that's what you're seeing here when the NUPL turns red. So if you look at the data, you will notice that whenever we turn red, this usually correlates with some type of market bottom. Now, something that's very important for people to understand when looking at on-chain data is that these are not timing tools. Again, these are not something that you want to look at and be like, oh, this thing just hit a level or a threshold, I'm going to go ahead and buy or sell based off of that. No, this gives you the bigger picture view. It gives you the fundamental view. This is all part of the anticipatory stage of your analysis. And then once you have this, those insights, then you can go into your execution stage and use tools that are meant specifically for your execution, kind of like your price charts and other things like that. So this is definitely not something that you just want to look at and execute just based off of, right? So this gives you a bigger picture view, and then you can go and refine the details on your price charts and with other tools that you might be using. So again, capitulation, that is when most people are in the negative, and that is usually when market bottoms form. Now, the opposite, which is going to be market tops, is going to form whenever most people are in profit, and this is shown here in the euphoria/greed section. So you guys can see whenever we hit that area right here, the NUPL turns blue, and that usually correlates with a market top. So that is the net unrealized profit loss. And if you guys have followed us for a long time here at Beyond Hodl, you guys know that we always talk about trading with the smart money, trading against retail. Well, here you can see whenever retail is too euphoric. You don't want to be a buyer when that happens. And you can also see when retail is panicking, which is exactly when you want to be looking for opportunities to be a buyer. So that's definitely one of my favorite metrics. Actually, that was probably one of the first few metrics that I ever discovered when I started looking at on-chain data. Next up, there's going to be metric number 2, which is the number of addresses with a balance of 10,000 or more. Now, this is more in line with tracking the actual whales, because what this is showing us is the number of addresses that actually have 10,000 Bitcoin or more as their balance. So whenever we see this increasing, we know that there's a lot of people with very large amounts of money that are actually accumulating. And whenever we see it decreasing, we can assume that there's a large amount of addresses that are distributing. Now, one of the things that is not 100% correct with this is some of these addresses could be exchanges or could be other entities that are not really here trying to buy low and sell high the way we think they should. But overall, they should give you some type of an idea of what the whales are up to. So for example, here we can see that around January, December, January, we can see here that the number of addresses with a balance of 10,000 coins or more had been decreasing. Okay, so this could have given us some insight as to, okay, maybe there's going to be a important high that's going to form very soon. And as you guys saw in April, we did see a major high on Bitcoin. Not saying that this is going to be a cycle high, but it was definitely an important high. We had a pretty decent drop from there. And by looking at this data, you could have been able to see, okay, maybe something like that could happen based on what I'm seeing some of the biggest addresses doing with their coins. Okay, so that was the number of addresses with a balance of 10,000 Bitcoins or more. Now we're going to go ahead and take a look at our next metric, which is the MVRV Z-Score. Now, what does MVRV stand for? MVRV stands for market value to realized value. Now, again, a lot of people might be asking, what the heck is realized value? Well, I'll explain it to you guys. Basically, when you look at cryptos, if you go to CoinMarketCap or any of these other websites, what you'll notice is the market cap that they give you for any coin is basically the circulating supply times the price. Okay, and that does not work in crypto. It might work in other markets, but it is not accurate in the crypto market. So what happened is a couple people, or maybe a specific person, I'm not exactly sure who exactly started this, but they created something called the realized value. And what the realized value does is it only takes into account a coin based on the price that it was last moved. So instead of looking at every single coin that is circulating and times it by the current price, you only times that coin by the price that it was at the last time it moved. So for example, if I bought a Bitcoin at $100 and now it is worth what, 30 something $1,000, the last time that coin was moved was when I bought it at $100. So in the realized value, that coin is only going to count for $100. Okay, so that is how the realized value works. And now when you look at the MVRV Z-Score, it allows us to see whenever Bitcoin is overvalued or undervalued relative to its fair value, which is the realized value. So we're seeing a Z-score of that right here. So whenever we see this overextended to the upside, it means that the market value is overextended compared to the realized value. And that's probably going to be a market high because Bitcoin is overvalued. Now, you guys can see it right here, this red zone. Whenever we hit the red zone, it usually coincides with a significant market high. And as you can see, looking at this value right here, you would have been able to see that we could potentially have a significant market high around here. So the opposite is also true. Whenever the market value is too overextended below the realized value, that means that Bitcoin is undervalued and you're likely to see a market bottom form soon after. So here it's represented on this green box right here, and you can see that whenever the MVRV Z-score drops into this area, we usually have a market bottom. So that is the MVRV Z-score. And now we're going to be taking a look at our next and last metric, which is the realized Hodl ratio, or Hodl ratio for short. Now, this one is one of my favorites. I've actually just discovered this one, and I think this one was created by Philip Swift. And one of the cool things about this one is that it did not give you 2 separate highs in 2013. Now I understand that these metrics, most of these metrics are not specifically looking at the 4-year Bitcoin cycle itself. They do give you all the major highs and lows within the cycle, but this one specifically has given you every single cycle high that has happened so far. And as you guys can see here, it's not suggesting that this is a cycle high. Now, does that mean that this high could not have been the cycle high? Absolutely not. But just based on this metric, that would not be the case. Now, how is this calculated? So this basically takes a look at the ratio between the realized hodl band of 1 week versus the realized hodl band of 1 to 2 years. In other words, it compares the short-term holders to long-term holders, and it allows us to see if the market is overheated or not. And one thing that you guys will notice again is that this is a lot more accurate at picking highs than picking bottoms. As you guys can see right here, it was a little bit late to the party when we're looking at the 2012 bottom. And when it comes to the highs, it is pretty accurate. So those are the metrics that I look at, guys. These are not the only ones that I look at, but these are some of my favorites. I hope you guys got some value from this video. You guys understand the importance of looking at the on-chain data. You guys see the edge that you guys can gain just from using this type of data and combining that with your technical analysis or whatever else that you might be doing. So again, if you got value from this video, make sure you give it a thumbs up. Make sure you guys subscribe to the channel for more videos like this. And make sure you guys hit the notification bell to get notified, because every single Monday and every single Tuesday, Ralph uploads our weekly Bitcoin forecast and our weekly altcoin forecast. So if you guys want to know what it is that we're thinking for a specific week where we think the market is most likely headed, keyword guys, most likely headed, then make sure you guys subscribe and click the notification bell so that you get notified whenever we upload these videos. And with that being said, guys, I hope you have an amazing rest of your day, and I will see you guys in the next one. Peace.